Okay, sound, I believe sound is good. It's a trading day, so let's get going, huh? Sorry for the delay. Hey, okay, welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. It's the 10th of December 2015. What a wonderful trading day it is. My name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way, an ECN that gives Forex traders access to the interbanking system. They don't take the other side of your trade. They put it in the market nice and fair for everybody. They also give you access to energies, metals, and indices, and all the other things you need to be a successful currency trader. So we will look at things like the stock market and the oil market, for example, which are really moving the currency markets. We'll host these events here at Forex.Today. Please register so you can attend these events. You can chat in the community chat with other currency traders like yourself. And there's over a dozen trading ideas posted by our analyst team every single day. And the analysts are stationed around the world, so they're watching the markets around the clock, and they're looking at the markets, they're analyzing it using all their experience, and they're taking the time and making the effort to post those ideas there for you for free. Check it out, dude. Hey, Aussie Jobs Report. Aussie. You're too close, or there's another mic issue. All right, well, hang on. There's some mic issue today, but I'll adjust a few things. I'll tickle this and pull on that. All right, Aussie Jobs Report. Aussie, 71,000. Holy smokes. Best Aussie Jobs Report, I don't know, like 15 years? What? Yeah. Holy smokes, right? What do you think? Yeah, it could have a positive impact on the Aussie dollar. Amazing, isn't it? How the analysts could be so wrong. They're like, yeah, I think we'll lose 10,000 jobs. No, we made 71,000. The unemployment rate, it's working its way down below 6%, which is pretty good, right? So, big thumbs up for the Aussie dollar. Now, keep in mind the personality of the Aussie dollar, even after jobs reports like this, is to make 100% retracement. So, Damath says, yeah, big spikes. Yeah, good. Big spike. Don't be shocked if it comes all the way around. I'm not saying it's going to. I'm not predicting it will. I'm just saying don't be shocked if it does. So what I said earlier in the week when we went through the calendar and we talked about this event risk or event opportunity, I said this particular report is one where you can catch the spike and take the profit and be done with it. Some trades, you want to hold on to. Some you just want to make your 100 pips and take a walk, right? That might be one of them. Just if you've traded 1,000 of them, like I actually have probably had the opportunity to over the years, that's kind of how I feel about it. So anyways, New Zealand cuts interest rates. Wow. We only talked about that every single day for the whole week. So they cut it. Word on the street, wink, wink, nudge, nudge, is that they're going to cut 2 more times. They're going to bring her all the way down to 2.0. Meet up with the Aussies. Wouldn't that be interesting? Now you say, well, what's the historical context of falling all the way down to 2.0? Well, how about this? I used to trade the Kiwi dollar when it was 8.75. Holy smokes! Yeah. Yeah, you leverage that up. against the Japanese yen, so you borrow, right, $100,000 worth of Japanese yen, that loan cost you 0.25%. Then you put it in the New Zealand dollar, so now you're long Kiwi yen. The Kiwi's paying you 8.75, but your loan is costing you 0.25, so you only make, in the interest rate differential on the carry, only 8.5%. And you're like, well, Wayne, what's the big deal? Well, I'm leveraged 100 to 1, so I'm getting paid the 8.5% on my borrowed money. Holy smokes. So if you take that interest rate and you leverage that up and then actually apply that towards the money that I actually have invested, my actual cash, I'm only tying up like $1,000 to control $100,000, right? So now I'm earning 850% on my $1,000. Yeah, that's not a bad year. Oh, and by the way, you can make pips too, right? So that was a long time ago. So to see this come all the way down to 2%, you're just like, I missed the 8.5, right? So anyways, and Bank of Korea, zippity-doo-dah, zippity-yay. Well, that's good, I suppose, because we're watching the Chinese renminbi, the RMB, the CNY, depending on where you are, what you're trading. The Chinese currency is losing value again. And when it depreciates, a lot of other Asian currencies or Asian commodities, can't speak English. How about, I'll change the words. How about other Asian central banks could use their monetary policy to also weaken their currency and then sort of offset any, loss of competitiveness against the falling Chinese currency, right? But they decided, we don't care, we're selling lots of Samsungs. Okay? Cool. Well, if they're not scared, that's a good thing, right? All right, Europe. The stupid national bank keeps their policy steady. That's cool. But they might cut interest rates more. Now, what was the politics here going on? Well, the ECB has a negative and slightly increased their negative deposit rate, which is designed to put euros into the market. So remember, when quantitative easing is created, the ECB goes into the open market, buys sovereign bonds. That's quantitative easing. Does that increase the money supply? Not necessarily. Okay? Not necessarily. This is a little more advanced on the topic, but in the simple world, in the basic textbook world, the answer would be yes. Okay? The ECB comes in, they buy bonds, it's in the banking system, it's in the fractional reserve system, and it gets multiplied out, right? Well, okay, that's the textbook. In the real world, what's happening with the banks? Because we're not in a normal world, right? Right? So the ECB goes into the open market, buys bonds, so the ECB gets the bonds, money is transferred to whoever sold them the bonds, that goes into the, right? And then where does that money go? Does it go into the market as loans? Are the European banks actually taking 100% or 90% of all that money and making loans like crazy? No, what happens? They park the money back at the ECB as excess reserves. So they've only increased the monetary base, but not necessarily the money supply. So now if the ECB charges those banks to hold the money at the ECB, now they're losing money on the excess reserves. So maybe they don't need so many excess reserves. So ideally, they just make the loans. And that's what the ECB wants. But anyways, so that should eventually weaken the euro because then the monetary supply is actually increases. And when the supply of something increases, its value decreases, right? So if that happens, the negative deposit rate should weaken the euro, and that could be a problem to the Swiss. because then it makes their currency overvalued, and they're already worried about such things, as you know. And so what the S&P could have done today is increase their negative deposit rate even more, so it's more negative, which is some weird European positive. I don't know. But anyways, that didn't happen today. It could have. It didn't. Does it mean they can't do anything more? No. But here's what I think that was really happening. They want to cut it, but for some reason they don't think they can. They kind of feel like they're out of resources or tools, right? And guess what? They decided, you know what, let's just talk this one down. Let's just use verbal intervention. But has the Swiss National Bank lost credibility? Yeah, they're a bunch of liars. Let me remind you, less than 48 hours before they removed the peg, the people in charge at the Swiss National Bank told the world that the peg is still the central policy of the Swiss National Bank. And they have no thoughts at all of removing that peg. Less than 48 hours, they screwed everybody over. Lots of people lost a lot of money. I honestly thought when that happened, it was going to be the next big global recession. Honestly, I started calling people, all my friends at big banks and stuff, and brokers and big, investors and stuff, and hedge funds. I started calling people. I'm like, what do you think? How'd you do? Are you okay? What are you hearing? Honestly, I went outside, sat in the sun, smoked a cigar, and I thought, you know what? Is the world going to lose 50% of their net worth again? Honestly. It was that bad. And only because the Swiss National Bank came out and told people, you do not need to worry about this. The likely risk attached to this peg is low because I'm telling you, you do not need to adjust your portfolio. You don't need to be ready, right? You can trust us. We're the Swiss National Bank. We are on this peg. We've been supporting this peg. It's still our central focus. And so, all right, I'll stick with them. No need to readjust my portfolio because of an increased risk. That's what a central bank's supposed to do, right? Yeah, Stephen's like, we have your back. We're the Swiss National Bank. You can trust us. And then, boom. So I'm still mad if you can't figure that out. So anyways, so now they're like, hey, maybe we can just talk this way, talk the Swiss franc down without actually having to add the negative, which, keep in mind, that costs money, right? So whatever. So they tried to talk it down today, and they're like, we don't believe you. We don't believe you. Okay, so whatever. Bank of England. All right, December meeting minutes. Okay, that came out as well. Voted 8-1 to leave interest rates unchanged.
There's no scheduled data top of the hour. We could see the real.
But they were not happy with the outlook, right? Very bad outlook for the future of the British pound. And now the street. Now, remember, very often the street's wrong. Okay? Very often the street's wrong. But now the street is talking middle to late 2017. Now I'm saying, what did I say last week? I think I said September 2016. Well, somebody's wrong. We'll find out if I'm wrong first, I suppose, right? Yeah, which street? So, yeah. But remember, I explained why. And of course, my opinion was 6 months ago. Maybe things have changed, right? I don't know yet. Okay? But my idea was the data will improve in the first quarter because of the way that the data is gathered. I've already kind of calculated it and come out with my projection per se, right? and that in the first half of the year, so let's say the first quarter data is much better than expected. Then from, let's say April, May, June, Carney can talk about how good things are and all that kind of stuff, and pump up the market, pump up the market, pump up the market, dance, right? Then we go through summer because, nobody can do anything in the summer. And they raise interest rates in September. And there's one piece that I need in here as well. Right? We need oil prices to be higher. Okay? Because that is deflationary. And right now there's been a double sort of double whammy going on. Low oil prices and a relatively strong pound, and it's only relatively strong versus the euro because the euro is so weak, right? And they're trading partners and stuff. So the pound kind of looks strong versus the euro. If you look at it over the last 2 years, right, there's like a 20% increase in the value of the British pound. So those two things are deflationary. Okay? So things kind of, I don't think I want to see a weak pound, but I'd like to see an improvement, an increase in oil prices. We're talking like almost a year, right? Yeah. Well, Marina, they got rid of him though, didn't they? Marina's talking about South Africa and the finance minister. Yeah, they fired him. They got rid of him yesterday, I think. Yeah, hey, welcome to the foreign exchange market, guys, where we can talk about, global soap operas, right? Oh, did you hear what the finance minister of South Africa said yesterday? Oy vey, right? Wait till your friends, you bring that up, right? You're at the party this weekend, your friends are chatting about something silly, and you're like, oh, and that reminds me, did you hear what the finance minister of South Africa said? And they look at you like, what are you talking about, right? So you're like, really? Am I the only one that cares about the finance minister of South Africa? Yeah. And then they start talking about NASCAR again, right? So anyways, this pushes the outlook for an interest rate hike like another year. So this is like 2 years away from the Bank of England raising interest rates. But if I get what I want, increase in oil prices, and just let the numbers fall where they may, then I'm thinking September. But again, I might have to revise if some of these things don't happen. Okay? And, no changes there. Boop. America. We love this country. All right? Baltic Dry Index. Well, you know what I'd like to see if I was to ask for something for Christmas? How about a slow and steady rise in the Baltic Dry Index? Probably not going to see that anytime soon, but we've seen in the past when China does buy to stockpile, this will increase. Last time it increased, it looked really good for a very long time, and then it just collapsed on itself again. Oh, John talks about the Saudi oil minister. Oh, did you hear the Saudis increased oil production last night? What? They increased it. So now we know it's absolutely, like if you didn't know before and if you weren't so sure, like OPEC didn't cut production. So you're like, really? Is that Saudi Arabia, trying to corner the market, right? Is it? Well, we don't really know, but how about Saudi Arabia actually increasing oil production? Oh, what? Yeah. So yeah, there you go. Yeah. They're fighting the Russians and the Americans, huh? Yeah. Well, that's going to let's say, diminish any inflation expectations from countries that are hoping to have it. Okay. Now, maybe at some point, low oil prices and then low gasoline prices, if you want to take out, crack it and go all the way to gasoline. Cheap gasoline at some point is almost going to be like a tax relief, if you will, because it's kind of like a tax. You need gasoline to survive in America because you got to drive, 10 miles to the Walmart. In Europe, you just get on a little streetcar and ding, ding, and off you go in your cute little town and your cute little village, and you walk everywhere. And, we're going to go to the square and buy some cheese and some chocolate. America, you get in your big SUV, 9 gallons a mile, and then you got to go to the Walmart, right? It's a different lifestyle. So, so to pay for gas is kind of like a tax. Wherever you go, you need to pay a tax. So, because it just comes out of your disposable income, cheap gas suddenly makes Americans feel rich. Maybe they just, buy more stuff they don't need at Walmart. So maybe Walmart benefits. How about that? Who else benefits? Well, you crack the oil a little more and you go a little higher up the refinery and you get things like jet fuel at the very top, right? And that's really good for airlines. Delta Airlines, American Airlines, so on and so forth. They're going to benefit. If they were smart, they would find ways to lock those prices in, but they're not smart. So, anyways. Hendrick says he shut up Walmart. No comment. All right. Initial jobless claims, don't care, but it's happening at 8:30. November import price index and stuff. Okay, I wouldn't make a big stink about that. And some Canadian news. Housing prices, is this going to be the big news? Like, what if it comes out 0.2 instead of 0.1? Holy moly! Doubled what they want. Right? It's like, whoa, that changes everything. So you guys ready for some technical analysis? Remember, there's already a lot of reports on Forex.Today, so let's get going. Forex trading ideas for today. Oh, here they are. They're at Forex.Today. Where's the button? Come on, button. There it is. How about that? John asks if I use volume in my analysis. No, not really, no. Volume is, how do you calculate volume? Oops. Because we're in an interbank system, so it's a little different. It's a little different than volume in stock, which goes through an exchange, right? Because then you can view it all, right? So, the Forex, so how does your broker calculate volume? And so, I don't know. I don't know the answer to that, so it's just not something I use. Okay. I don't know. I just never, it's one of these things. I've been trading for so long that what I do works. So honestly, I haven't changed my trading strategy in like 10 years. Just never had a need to. And if I've done anything, if I've made adjustments over that period, I've reduced. Right? I used to use MACD all the time, but I can just see MACD, so I don't need to plot it. And I almost don't even need to do stochastics, but sometimes it's comforting to have it there. So the most important things, I mean, you can fold in all kinds of algorithms and indicators and all these things to help you make decisions. But the most important thing, right, is support and resistance. Honestly. That's the most important thing. I don't care about volume. I don't care about overbought and oversold conditions per se. I don't care about this, that, and the other thing. The number one thing, and if you only could do one thing, support and resistance. And then second, right, trading that price action. So like, for example, let me ask you something. Okay, what are the market conditions here? Is this CAD yen, is it an uptrend or a downtrend? It's a downtrend. You know what? 50 to 70% of your work is now done. Do you understand? Just this analysis here, and I know you're saying, Wayne, this is a stupid question, but you know what? This is where traders lose money. Simple, stupid things like this. You know, here's a classic mistake. Trend trading in a range-bound market. And they're like, oh, well, this moving average and this oscillator and this fib and this pivot point. I'm like, dude, you're trend trading, the market's moving sideways. You're using moving averages, but they're just braiding. Like, they're not telling you, what are you doing? Right? So a simple, stupid question that everyone needs to ask every time they open up a chart. What are the market conditions? Is this trending? Yes. Is it trending up or down? Down. You should be a bear. Great. So, strategically, well, actually it's tactically, that's the strategy right now, let's say, on this time frame, on this currency pair, in the moment, is to be bearish. In fact, you can see just on 2 days ago, on Tuesday, I set you up on a plan. Zoop. Then Wednesday it extended. Look, boom, money made. Pips in the sun. Right? Cool. So that was the appropriate thing. Where's the genius there? There's no genius. The market's falling. Why wouldn't you sell the retracement? Okay? Right? Okay, then, if you're a bear now, because you said, I think this market is trending, it's trending down, I'm a bear, now you sell at resistance. This is the thing that you care about now. So, you know, again, volume not the most important thing. The most important thing is to identify one or two levels of resistance in which you will look for a reversal pattern. By the way, are you writing this down? Okay. Yeah, Johnny's in between the ears, but it's right. It's always important. It's amazing how it's always important, right? So where's one or two levels, right? So the way I roll, is I look for, you know, the first thing is I look for a 382 to 618 Fibonacci retracement, right? So yesterday, if you're, or I remember doing this, I guess it was 2 days ago, we measured the low to the high, that kind of thing, right? You can see the London boys ended up making it happen, which is typical. And if that doesn't work, where's your next level? You know, something like that, or change the time frame, or whatever. But you make a decision. And you can see, and I don't remember why we did it this way, but I predicted a higher move. Oh, you know what it was? Was this the 4 hour 21? This is the one where I told you how to use fractal geometry. I'm like, how do we trade this 4 hour 21? Because it was higher? We predicted the 618 to 786? All right, well, cool. All right, well, there you go. So now we're following up the fractal conversation, but now let's talk about the entry again. All right, so anyways, comes back, tests the level of resistance. So now if you're up in here, right? Now you need some sort of reversal pattern or indication that it's going to continue in the direction of the prevailing trend, right? What sort of trigger could put you into this trade, guys? You know it's bearish. You know it's retraced 62%. But you're stuck in the Asian session, and it ain't going anywhere quickly, right? Your confidence is waning. Well, Zhao says the 55, but you know the 55 is actually making you nervous because it says, yeah, the market's bearish, but it's not aggressively bearish. But we're almost looking for. And also I should comment. Look at the angle and separation between the 21 and 55, right? So you can see here that the MACD would be rising towards the waterline, and here it almost actually touches the waterline. Now you're saying what MACD? Well, it's not on the chart, but I can see it. I could draw it for you. Okay. But anyways, you know, room to be nervous in there. Let me adjust this here. So what other trigger could you use? What price action indicates a bearish trend? Lower low, lower high. So you can look for a pattern like that. So let me just use this extension from 2 days ago. Okay, how about something like that? Okay, and you say, well, Wayne, it's kicking off here and that makes me nervous. Well, time of day, it gives me the confidence on this one, but it doesn't have to be for you, right? But there's the support I'd probably play. But let's say that still makes you nervous, which I'm okay with. This low to this high, okay? Now, is there any doubt that that's a lower low relative to, let's say, this low? Right? There's no doubt in the world, right? Absolutely no doubt. So that's the one faux show that you should be looking at. Okay? And there's the break. It's a breakout strategy. Okay? So somewhere in there you got to get involved. Okay. Is support and resistance important in there? No. So let me ask you, and who asked about it? I think it was John, right? How about this? Do we have volume at the London Open? Or would it be low volume? Jimmy, that might have been New York. Yeah, there's always going to be high volume in New York, in London. It's basically the beginning of the day. It just, I mean, relative to everything else, even if it's a low volume day, peak volume is going to be at the London Open. And then another jump at the New York Open. So it's always going to print pretty high, right? So anyways, it's not the big decision for me. I've already made my decision for other reasons. So, you know, that's the honest answer. And, you know, so I hope you're good with that. All right. So on a higher fractal now, let's see, should I get rid of this? I'll get rid of this. Let's do it this way. Let me well, no, I'm just going to get rid of it. Boom. All right, so we have a new low. So let's say you're trading the hourly chart. You would look at it from a different point of view than what we're looking at now, but it doesn't matter. That low is lower than the previous high on a higher fractal. So I'm going to move this across, okay? This printed a low, and I'm going to move that across, okay? Because what were the questions? Is the market trending? Yes. Is it trending down? Yes. I need two levels of resistance in which I can sell. Remember, I don't sell low. It's another amateur mistake is to sell low. I don't sell low. So if I'm going to sell, I need to sell high. So I need to identify two levels of resistance in which I may consider selling. And so I take this low and this low are my first two things I spot right away. Okay, let me update this. Boom. And that's what I'd be thinking if I were me. If I believe this trend is going to continue down, that's how I would set this up. Okay. Draw that on N/C. What do you mean N/C? Oh, Kiwi Swissy. All right, you're talking about something that's fundamental there. So I can tell you, I don't even need to open my charts. You're asking me to do technical analysis of a fundamental change. Both New Zealand and Switzerland had central banking changes today, or potential, like, announcements, right? So any move on there is not going to be technical per se, right? Just consider it like a big emotional thing. So like the Bank of England essentially downgraded their forecast. Okay, so the pound is down. Why? Because of the daily 55? Well, no, because they adjusted their forecast. Swiss franc, they were supposed to do something, they didn't do something, but they still might do something. I mean, is that all technical? No. So you're asking me to analyze something that's a complete emotional mess, and then make something logical intelligence out of it, right? Right? Why do crazy people do stupid things? Well, because they're crazy, right? Yeah. So, anyways, what does it all mean, Basil? It doesn't mean anything. So, anyways, we'll talk about it next week after you make some logic out of it. But so going back to what I think the most important thing is Captain Obvious says this is a bearish move. Good. Sell the retracement. Sell the retracement. Sell the retracement. Right. So where are the entries? Okay. When you make a break below the moving averages, I look to retrace. I look to retrace back to the moving averages. But you notice that's just a fib of the drop. It's not complicated, right? Back to the moving average, but again, it's also a price action move. Okay, right? Right? Back to the moving averages. Right? New drop, back to the moving average. So these circles are the entries. Your behavior as far as an analyst as you're trading this, you say at this point, let's say in here, it makes new lower low. You should mark this and say if it comes back to 91, I might have to sell it. Oh, there's a little dipsy-do, right? You could have traded this on a 15-minute chart. I'm on an hourly chart. But you can see that it broke, retraced. There was a short there. On this bigger macro level, no. But then anyways, it makes a new lower low. As an analyst, again, you grab your drawing tool and you move this across. There's your future resistance. Oh, that one did work. Okay, when you're down here, you drag this across and say, I could sell here. Well, did you see it did break lower? It did pull back. There could be another trade. On the hourly chart, no. On the 15-minute chart, yeah, probably. Makes new lower low. You take the old low, you drag that across. New opportunity to sell. Okay, and you just do this over and over and over and over forever and ever and ever and ever and ever and ever, and then it'll stop, and then you should stop. Okay. JG Wentworth wants to do euro dollar. Sure, Joseph. Okay. So that's CAD yen anyways. And by the way, that's just falling oil prices. Easy peasy lemon squeezy. All right. So one of the questions I keep asking you is, where is the money? right? You want euro dollar to fall. Cool. Yeah, if you want a currency pair to move, you need new money in the market. Right now, we're just losing money out of the market. Okay? People are getting out of the euro short. There's no new money. Now, there could be some scalpers and stuff. Okay? But not necessarily new money. So, at what point are people going to reshort the euro dollar? Did you sell it at 110? $110.28? Okay. Now, one of the things I talked about yesterday is, getting the reversal pattern first. Because if you look at this 2155, I really, really, really dislike selling into a 2155. The only sort of the only time I'll consider it, there are actually two times, but let's take this one. It's when you're up here, and at that time the 21 was like down here, right? And the price is so stretched out from the moving averages that it's just got to revert back to the mean. That's a counter trend mean reversion. Okay? And the higher you do that, the better. The farther away from price or from the moving averages, the better. Well, at this time, we were riding a 21, so there wasn't much difference, right? So I'm very wary. Okay, I'm very wary of selling into an uptrend. Now I know it's the favorite amateur move, right? Look at me, I'm so smart. I sold at the very, 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 very top. Uh-huh. Yep. I don't want you to be smarter than everybody else. I want you to make money with low risk. All right? You shouldn't try to be smarter than everybody else. So what I'd rather see is a reversal pattern. It's not the smartest thing in the world, but it's less risky. Marina, CAD yen falling. I know. Right? We talked about it on Tuesday. Yeah, Warren's like, you can get yourself in a lot of trouble. Well, that's the point. I don't want high-risk trades. I don't want that from you. If you were trading my money, I wouldn't want you to take a bunch of high-risk trades. Well, Wayne, I've been trading, Forex for over a year now. I'm capable of taking the high-risk trades. Uh-huh. No. So let's wait for a reversal pattern. If you're a bear, shouldn't we just wait for a reversal pattern? And what's wrong with that? But I know you're thinking this whole time, I'm missing it, I'm missing it, I'm missing it, I'm missing it, right? I'm going to miss it. It's moving without me. It's moving without me. It's moving without me. So what? I thought you had discipline. Oh, yeah. I have discipline. Yeah. Yeah, you got to be patient. You have to have discipline and patience to wait for it. Oh, yeah. I'm patient. Yeah. Got to get in the trade. It's moving. Patience, dude. Relax. Because you can say, oh, well, that's cool. Because if it bounces off the 55 now, which it probably will, because that's what the 55 suggests, we could be looking at a lower high at this old resistance level, and then maybe I can sell it at the retest of 110. Catch a nice little lower high off the top. Yeah. You see? Which style do you think is going to carry you through the next 10 years of trading currencies full time? Your heart is beating like a little bird, right? You're like a chipmunk. Gotta go. What was that? Gotta trade that. Right? Oh, look at that. I don't know what it is, but I gotta trade it. Like, that doesn't even sound like a plan to me. You really seriously planned to wait for it to spike 150 pips, and now you want to sell it. Why didn't you just buy the spike? Right? You're so eager. Do you remember how clearly and how focused we were on this trade in here? That there was 9 reasons to buy it? Right? It's like a calm, casual, buy it at 108, get out at 110. That's 250 pips, guys. 250 pips. And you're shorting off the top? High risk, low reward scenario? But I bet you didn't take the 250 pip easy trade, right? And you say, well, Wayne, I just can't short the euro dollar. Or I can't buy the euro dollar. Well, you're not buying the euro dollar. There's profit taking. And the price action is up. That's just where the money is flowing. People are getting out of trades. So it's going to flow up for now. And I think I said I want to see it reverse at 112, right? Like way up there. I did have 110.50 lined up right after NFP, though. I think it was last week's reversal pivot zone, right? So we did talk about 110.50, and it did roll over at 110.50. So, you know, but that is last week's trade, kind of. But if you traded it short off 110.50, you know, ugh, see, I just can't. I'm choking on it. It's too ugly. I want you to, you know, I think what's going to carry you, to just answer the question, over the next 10 years of trading currencies as a full-time job is patience and discipline and low blood pressure. I distinctly remember when I first started trading, I'd place a trade and I would lose sound. I'd stare at the chart so hard, I remember even color would disappear. I'm not joking. And I'd start sweating profusely. Right? I'd place a trade, then I'm like, oh my God. Please. Right? I mean, I'm not joking. It was sort of like going all in every time, right? Sort of like, playing poker. Like, boom, there's my cards. I'm all in with my chips. You got to stand up. You're like, oh, I hope I get the flop. But I'd literally stop breathing. You know, after being in the trade for a minute, I'd go, all right? Yeah, that's not how you trade. So if you trade properly, how about, just as something to mimic, a really good trader should be surprised they didn't make money. It's not that you're a genius, it's that you're taking higher probability trades. You're like, you think it'll reverse. 110.50 was a potential reverse zone. A little higher would be better, but you're watching it. You're just watching for the evidence, right? You're like, okay, this was a great significant pullback to the 200 EMA on the 15, which is the 55 on the hour. And so what would really be cool would be a 50% retracement, which is also a 50 pip retracement, right? Because it fell from 110.50 to 19.50. So wouldn't it be cool to have it come up, tickle the 110 psychological level, which is a 50% of the drop, and then you look to go short. Right? You know what I mean? Debista says, praying, to the screen god. You know, Have you ever, like, literally tried to speak to the higher powers through prayer, and you're like, please just allow me to get back to break even? What? The dumbest thing ever. Now, first of all, why would you want to get back to break even? Why wouldn't you just make money? And second of all, why can't you take the loss? What's wrong with you? You ever think about that? That's why you're on your hands and knees now praying, because your loser just got worse and worse and worse because you don't have the guts. Hey, are you disciplined? Oh, yeah, I'm disciplined. Can you take a loss? No. I'm trying to get to a 90% win rate. By the way, nobody cares about your win rate. Nobody. No professional. Right? You need to be able to take a loss. That's what a professional investor wants to see. How good are you at taking a loss? Because it's called risk management. Nobody cares. Look, if you said, Wayne, I have a 95% win rate, I'd say, all right, you're a loser. Because you don't have the guts to take a loss. What happens is you just let it get worse and worse, and you sit on it and let it come back, and you know, it's just not right, man. It's just not right. You got to be, proper risk management says, hey, when things go wrong or if things change, just take the loss, move on to the next winner. It doesn't matter. It shouldn't matter. Right? I like to look at pain to gain ratios. Right? How much do you lose on a trade before it becomes a winner? I've seen guys that have, no joke, 90% win rates, and they do it for years. But I see on a regular basis from guys like that very often could wipe out their entire month on one trade. Because they make, let's say, 20 pips on a trade per average, and they make 5 trades a day on average. Okay, fine. They're a good trader. But then every once in a while, they'll have a 200 pip loss. But they don't take, first of all, they let it to get negative 200, and they still don't get out. They just ride it out. So the average, let's say the average trade is only, let's say 3 hours, but they've been in this one for a week. Okay? Not cool, man. It's not cool, but they have a very high win rate. Not cool. Does one have to go through the mistakes before understanding this? It seems to, John, because, how about this? Let's reverse it. Okay, so I'm here every day, and I provide really, I don't know, hopefully sound advice, but sort of real-world experiences that I have had over the years, and I share that with you, and you hear it and you understand it, and most often I'm sure you agree with it, but then you still make those same mistakes yourself, even with guidance, right? So you still have to touch the stove for some reason. You still have to burn your fingers for some reason. But try doing it without a guide, right? And what happens without a guide is you don't know really where you're going. You don't know when you're on track. You don't know where you're off track. You don't know what you're doing right. You don't know what you're doing wrong. And we get back in that situation where you're wandering in hopeless night. So at least someone could say, look, no, you veered off path a little bit. And when you do that, you can fall down and hurt yourself. Well, sometimes you just say, all right, you fell down, you got off path, but you're okay. Clean yourself off, get back on path. Let's keep going in the right direction. So hopefully, if anything, yes, you probably still have to go through the mistakes, but maybe you go through them less often, and you have more rewarding experiences than the negative, right? Maybe. But I have a feeling, hanging out with me for a year, you moved to where I was after 3 or 4 or 5 years. Right? Because I had to figure it out on my own. So anyways, so I think this pattern that I have here is still valid. So I'm going to look for a lower high. I would like to see it around 110. So if we get a fib now of this drop, and then it does drop, then this macro remember this whole thing was drawn days and days and days ago. So if we get this now, let's say if this develops off of this area, actually I want to take this a little higher, then where we are in the process is right here. This move here is this part of the prediction. Then we'll have a big drop over a week or so, pull back maybe through Christmas break, and then into the new year that way. Maybe. Or maybe not. Maybe this just floats all the way to 112, which is also very, very possible, because right now I don't believe people are truly trading it. Now, did somebody get back in at 110-ish? Right? Is this new money going back short? Very, very, very likely. We talked about it yesterday about people that made big money on the euro dollar short. Maybe they want to get back in and try again at the end of the year. Maybe we can double bottom again by the end of the year. Maybe this is new money. Good. Maybe it is. So I need a retracement. Okay? Because I don't pick tops and bottoms, especially bottoms. Okay? So I'm not going to trade that. That's a high-risk trade. That says I'm smarter than everybody else in the entire world, and even though hundreds of billions of dollars are coming out of the Euro USD short, I'm going to get back in, and I'm the one that's going to reverse the whole thing with my mini lot. Well, that just sounds stupid. But if we can get a significant technical break back below what could have easily been a support area, and then make a lower high, and start to drop again, now I really truly believe this is new money, and I'm just going to let the new money make me profit. See, I can't reverse the market, right? But I can certainly, ride on top of their money. Huh? So, degenerate gamblers up here, unless you're just scalping and stuff, I'm cool with that, but you're probably not holding. But this is it, man. This is where you want to be short. This is where you want to be short. Okay? If that acts as resistance. But don't be shocked if we still, after that, go higher. This is not a clear and decisive trend. We had a clear and decisive trend since 140, and it basically dropped to parity. Okay, it dropped 4,000 pips, and it's now the second last. There's only really 10 trading days left in the entire year. So massive profit taking. So be careful. Be smart about it. Make it almost a test. If you were a professional trader, what would you do and why and how? Is that, you want to short this? That's what you want to short. If the answer is no, then what would make you want to short? Write it down on a piece of paper. Right? I mean, take your time. And see if you're right. Okay? How about the reverse of this whole conversation? Okay? Is that a buy? Just happens to be a 50% retracement. Is that the type of pattern you like to buy? Double bottoms? Okay. Because you might find, and I'm not saying it will, because if you're a bull, you're probably thinking it's going to go from 109.50 to 112.50. 112.50. Okay. I think it would be cool if that 110.50 was the top. That'd be cool. Mostly because it was an issue for me right after the event. So it was last week. 110.50 was an issue. And I think it was the weekly reversal pivot last week, but whatever. But I don't know. I would prefer we go in the direction of the fundamentals, the central banking policy divergence, but it doesn't have to in the short term. So just be smart about it, right? Well, Alan, so let's wrap up with this. Alan says, wasn't the Aussie jobs number a surprise? Well, yes and no. What was the previous month? Was it the previous month good or bad? Yeah, it was very good. So what I said earlier, and we did talk about it, if it wasn't this Monday, the previous Monday, or whatever, we've talked about it in the past. I say one data point a trend does not make, right? From our good friend Kurt Worley. But now we have two in a row, right? Do you remember I talked very clearly about what if 70 cents was the number, the low for the Aussie dollar versus US dollar. I said Governor Stevens talked it all the way down to 70. We got to like 69.5, then it bounced back above 70, and we've never really tested it since. And I said, what if that's it? What if the commodity prices have bottomed? What if that is the lowest low for the Aussie? What if? And we still haven't retested it. I'm looking at Aussie USD right now. We're at 73. So it's not skyrocketing. We're up 300 pips in a month or so. But, over a month, actually 6 weeks, we've gone up a radical, 300 pips. But not down is the beginning of a positive move, right? So really, I'm wondering if we're forming a J-low. Does anybody not know what a J-low is? Who would like to know what a J-low is? A J-low is a big, wide bottom. Not just a bottom, a big, wide bottom. Wink, wink, nudge, nudge. So, yeah. We felt a support on the daily, if you look at it, and moderate support, but we did bounce there, and so, two good Aussie jobs and a jobs report back-to-back, month-to-month. Gold isn't falling much more. I'd like to see some stabilization in things like iron ore and coal. I'd like to see trade surpluses for Australia, but I think we're a long ways away from that, right? Luis, why don't you Google Jennifer Lopez? It's a wink, wink, nudge, nudge. Now the funny thing is, and I actually did this, so you can feel free to laugh. But you Google J-Lo under Google Images, and it categorizes the images because they have so many pictures of Jennifer Lopez. So, anyways, take a look. Maybe it'll stand out why I call a big wide bottom a J-Lo. Maybe it'll stand out. Yeah. Yeah. I'm not saying you'll notice, but maybe you will. Yeah. All the other brothers can't deny. All right. So anyways, thanks for hanging with me. Thanks for being on my team. You make me want to be a better trader. And that's true because I got to have A game every day for you guys. I can't let you down. So thank you. Maybe open a live account at tradersway.com. Remember, we're essentially investing into you up front so that you can become a success and then choose Traders Way as your primary broker. Tomorrow's a Friday, so I'll be at fxstreet.com. And for now, I'm going to put you back on where is it? I'm going to put you back on Forex.Today. And would you be so kind as to read through some of today's reports and trading ideas and, and click on one or two or 10 and perhaps leave a comment. Because again, these are not robots. These are real people that are spending time and sharing their thought process. It'd be cool if you left some feedback. Sure, hey, good job is one way of doing it, but what do you think about the pound-yen trade setup? And how's it setting up for you? Do you agree? Do you disagree? I mean, just, share some thoughts, my friend. Oh, how do you replay past webinars? Okay, good question, Guy. They're right here. Okay? They're right here, and the most recent one is usually right there. Takes a while for it to update, but that's usually where it is, okay? And of course, you could subscribe at the YouTube channel as well. But you have to click a button. That's a lot of hard work, right? So anyways, I'm going to drop you back onto Forex.Today. Like I said, please review and perhaps leave some comments for the team. They do put a lot of hard work and effort into it for you, for free. So peace on earth. May the pips be with you. May your profits be above average. Cheers.